Hello investors, today I'll speak about the best dividend stocks for now. If you want to secure a decent yield, it can pay to buy shares of strong companies dealing with short-term problems. A cool thing about dividend stocks is that when their shares drops, their dividend yield rising, giving shareholders an opportunity to add to their positions and lock it better cash returns at a lower price. In the current bearish market, several appealing options have been created to do so, just that and allow savvy investors to increase their passive income. Of course, it only makes sense to buy beaten down dividend stocks if you are confident that the company's cash flow will be consistent enough to support it payout year after year. With that in mind, let's take a look at two stocks that have taken a significant price lately, but still have what it takes to maintain and even grow their dividend distributions to investors. And let's start with the first stock for today. It's Walgreens Boots Alliance. It already down more than 30% from the beginning of the year, and that is because the demand for pharmacy services is relatively static from the year to year, even when the business offers fresh and relatively popular products like coronavirus diagnostic tests. The good news is that there won't be a massive decline in demand for its core offering either, which means that diligent maintenance of profitability and slow top-line growth can easily generate very stable returns for investors over time. Plus, it doesn't take much profitable growth to fund conservative dividends hikes. Since the third quarter of 2012, WBA dividend rose at a nice figure, 74%, while its quarterly free cash flow increased by 374%. Yeah, it's a very impressive figure. And let's check its chart. We can see that it's a weekly chart, and now if we will see the Elliott waves, if it was the first wave, then second, third, 4 and 5. So in my mind here the correction may be finished. Also we can see that last 10 years we already traded at a range, so now we're in the lower border of this range. So from this level there is a probability to see bounce. Also check this out, that the dividend is already more than 5%. And if we'll check the other side, the momentum indicator, we can see that this stock is already oversold, because this now its number is 36. So most probably, as I mentioned earlier, from this point we may see a nice bounce. And let's check the fundamental parameters of WBA. We can see that that EBITDA ratio is more than 4. It's not so low, but the interest coverage is quite enough. It's more than 5. This current figure is 7. So for me, it's the financial stability of this company is not an issue. And also check this that the gross margin is more than 20 and the net margin is 4. So now it's a profitable company. The value of this stock peer is only 5, so it's very cheap. And check this figure, the PS ratio, price per share, is only 0.22. So for 22 cents you can buy $1 of revenue of this company. So for me it's very cheap. So and this why one of the main reasons why I like to buy this stock. And concerning the dividend, this current year yield is 5.5. The 3-year dividend growth is also about 5. And the dividend payout ratio is only 30%, so it's very low, relatively low payout ratio, so most probably the company even can increase its dividend payment. So for me, WBA has a nice fundamental, very nice dividends, and it's the first stock for today. And let's check the second stock for today. It's Viatris. If you take a popular generic for a medication like Lipitor, there is a good chance that it's Viatris manufactured it. Since its spin-off from Pfizer in the late 2020, the company's life as an independent drug manufacturer hasn't been easy for shareholders too. But now we can see on the chart that the price drop has helped push Viatris dividend yield to appealing more than 5%. It is also appealing because the payout has been hiked by more than 9% in the last 20 months. Viatris is now a profitable company and it's working on streamlining its operations and reducing its cost of goods sold to save as much as $1 billion in cost annually by the end of 2023. It is also planning to launch 6 new generic before the end of 2025, which will lead to significant revenue growth. If we will check the chart, we can see a declining channel since the last 6-7 years, and now we are trading in the lower border of this declining channel. Also, please check that now we are trading at a major support level. It's about $10. So most probably we can see from this level a nice bounce, because we can see that the RSI, the momentum indicator, showing us this that this stock now is oversold. And also, if we'll check the horizontal levels, we can see a nice cluster here. It's about $70. So from this level we can see a bounce, and in this case the upside is movement is possible, and we can see a nice bounce more than 70%. If we will check it fundamental parameters, we can see that the ratio of the debt to EBITDA is about 4, interest coverage is more than 3, so it's a little bit riskier than the WBA. The gross margin is higher, is about 40, and net margin is 4%. Also, we can see that the P/E ratio is 15, but please pay attention that forward P/E ratio is less than 3, so it's expected that in the future years, of course, the net income will rise very significantly. And check also the PS ratio, the price per share, that is less than 1, so it's very cheap. And regarding the dividend, 5-year, current dividend yield is 5%, and the payout ratio is also less than 100. And please check the liquidity ratio. The current ratio is above 1, so in the short term, in 1 year, I don't see huge problems in this company. So compared to WBA, Viatris is somewhat riskier, as it hasn't yet been an independent company for long enough to have a strong track record. Still, if it can slash its cost while expanding its sales and deleveraging its debt over the next few years, it will be a good candidate for holding for decades to generate passive income, even if its stock probably won't outperform the market anytime soon. So for me, it's 2 dividend stocks that I'm buying right now. If you like this video, subscribe to my channel. I have on my channel a lot of videos about dividend stocks, US stocks, stock market analysis, technical analysis, fundamental analysis. So don't forget to subscribe, and see you on the next time. Bye.